Gold revaluation, really dollar devaluation in the Bitcoin Act. Could it take a few days, a few weeks? Yes, but not much longer than that. Let's get into the slides and I'll explain why this is what is going to happen. And at the Senate is a bill called the Bitcoin Act, aka the Endgame Act. The idea behind it is to revalue gold, meaning devalue the dollar. We discussed in a previous video how there is no such thing as gold revaluation. It's really just dollar devaluation. The Bitcoin Act will revalue the Treasury's gold from $42.22 an ounce to the market price of around $3,000. Now, I believe it's now about $3,040 or something. It keeps going higher and higher every day. This is the sound, the footsteps of hyperinflation. But anyway, the Fed will reissue gold certificates and print the difference and hand it to the Treasury from $42.22 an ounce to $3,000 an ounce, which will net about $800 billion. Marking that gold that is represented by those notes called dollars up to market value of about $3,000 will alter the entire price matrix and cause nearly instant hyperinflation. Could it take a few days, a few weeks? Yes, but not much longer than that. Let's get into the slides and I'll explain why this is what is going to happen. And this is going to be, if this passes and gold is actually revalued, the dollar is actually devalued relative to gold, then the positivist theory of the Austrian school that all prices are actually denominated in gold ounces and not in dollars, this will be the ultimate test of that theory. I know the theory is correct because the Austrian school is a positivist school that operates on logical principles going back to first principles, layer by layer by layer. It is not an empirical school, but this would be the most obvious empirical test of Austrian school theory. Gold revaluation, really dollar devaluation in the Bitcoin Act. A bill to establish a strategic Bitcoin reserve and other programs to ensure the transparent management of Bitcoin holdings of the federal government. You'll see that the Bitcoin aspect of the Bitcoin bill is completely irrelevant to the dollar at all, and I'll explain why. This act may be cited as the Boosting Innovation, Technology, and Competitiveness Through Optimized Investment Nationwide Act of 2024, or the Bitcoin Act of 2024. Section 12, or whatever that 12 means, says Federal Reserve System gold certificates not later than 180 days after the date of enactment of this act. The Federal Reserve Bank shall tender all outstanding gold certificates in their custody to the Secretary. Not later than 90 days after the tender of the last such certificate, the Secretary shall issue new gold certificates to the Federal Reserve Banks that reflect the fair market value price of the gold held against such certificates by the Treasury, as of the date specified by the Secretary on each new gold certificate. Upon issue by the Secretary, each Federal Reserve Bank that receives a new gold certificate shall remit the difference in cash value between the old and new gold certificates to the Secretary for deposit in the general fund within 90 days. What this means is that the Fed will print about $800 billion and hand it to the Treasury as the revaluation of its gold certificate account takes place. But really, it's not the gold that is being revalued. It's the dollar. This is a possible timeline that I found on Twitter or X. It's plausible. We'll see. I don't know if anyone understands in the Trump administration what gold is and what the dollar really is. So as far as I know, this is possible. I still think it's unlikely, but a lot of unlikely things have happened these past 2 years, so I don't really count anything out anymore. If this timeline is correct, the dollar will absolutely die this year. I don't know if it's correct. This is just something I found. So it says here, stage, estimated date, bill introduction, March 11th, 2025. It's already been introduced. That happened. Senate committee hearing, early April 2025. Senate committee vote, mid-April 2025. Senate floor vote, late April or May. House committee action, May 2025. House floor vote, mid-June 2025. But we're looking at here a chart of the CPI inflation rate of the 1930s, around the time when the last devaluation of the dollar happened in 1933. You can see here we went from about negative 9% inflation, meaning price deflation of 9% annual, at the time in April, May 1933, when the revaluation took place, from $21 to $35, which was a devaluation of the dollar by 66%. And we went from 9% down deflation to about 6% up. And this price inflation lasted from 1934 to 1938. Now, that was only a 66% revaluation of gold, or a devaluation of the dollar relative to gold. This, a mark-to-market to 3,000 from 42.22, would be 7,000%, or a factor of 100 times greater than what happened in 1933. So what do you imagine prices will do then? This is not a proof of anything. This is an empirical argument, because I realize empirical arguments are more convincing to most people. So I don't need empirical arguments to know that the price matrix is in gold, and a revaluation of gold relative to the dollar, or a mark-to-market to $3,000, would send all prices skyrocketing in dollar terms within weeks, possibly even days. Now, here is the argument. The dollar is still a note for gold. Excuse me, I'm trying to squish it into one screen here. So, first bullet point, due to the Misesian regression principle, which states that all prices must be connected to the past in order to convey any economic information. The only reason you know what to do in the morning is because you know what prices are, and you knew that from yesterday, and so on and so forth, since the price matrix began as gold and the dollar replaced it as a derivative. So, due to the Misesian regression principle, gold is still the price matrix. The rest of the pyramid is on top, affected by the base of that pyramid, which is gold ounces. The dollar, second bullet point, is an imaginary chimerical fiction for the purposes of gold accounting. You can lie about how much gold is represented by a dollar, and the market will be affected by that lie until that lie is revealed and everything changes. Third bullet point, gold, on the other hand, is a real thing you can pick up and look at and hold and throw at people. It is a real, actual, physical thing, and therefore it is the money, and the dollar is only a representation of it. If you alter the gold base of the pyramid upon which we all exist since 1933, when that base was revalued from 21 to 35, everything on top of that, the entire price structure, is resting on that gold foundation. If you alter the gold base, everything on top of the base changes pro rata. It doesn't do it within a millisecond. It takes a little bit of time for the markets to adapt to it, to adjust to it. Maybe days, maybe weeks, but no longer than that. That means, next bullet point, treasuries collapse. What are treasuries? Treasuries are promises to pay in dollars, which are promises to pay in gold. That means treasuries collapse in value. Interest rates skyrocket, and all banks that hold these future promises for notes on gold, which are treasuries, collapse in a smoldering heap. Another way to look at it, a bank run, is when the bank does not have the dollars to cover your deposits. Deposits are derivatives of paper dollars, which are derivatives of gold. You, therefore, in a bank run, lose your dollar, lose your purchasing power, and you are a lot poorer. But if you move it up one level to a central bank from a regular bank, a central bank run is when a central bank does not have the gold to cover your dollars, and therefore lose your gold. If you lose your gold in a central bank, you lose your money. It's all the same thing, just one level up. When a central bank run is happening, it's when the currency itself collapses. You don't lose the physical dollars. You lose the representation of gold that they once represented, and therefore you lose your purchasing power. If you believe this is just an accounting gimmick, that it doesn't matter if gold is $42.22 on a balance sheet or $3,000, what's the difference? It's all just a gimmick to print $800 billion so they can spend it on Bitcoin. Ask yourself this question. If gold is not money, if the real price matrix is not gold ounces but rather dollars, then why does the Fed maintain an absurdly obvious fiction on its balance sheet? Why don't they just say, well, the gold is $3,000 an ounce now, so here, Treasury, here is your hunk of dollars. Enjoy your Bitcoin. Enjoy cracking up the foundations of your entire monetary system in order to add another layer on top so you can see above the clouds and watch what happens to your palace? The answer is because gold is the price matrix, because everything is priced in ounces of gold through a derivative called a dollar. Now, people have asked me, what if they don't buy Bitcoin with these dollars? My answer is it doesn't matter what they buy. They don't even have to buy anything. It's not a question of the money supply adding 800 billion units to it. That doesn't really matter that much. The money supply is already like 23, 24 trillion or whatever it is. Another 800 billion is not going to cause prices to triple, quadruple, quintuple in a few weeks. The issue is the revaluation of gold itself. Once the fiction of 4222 is admitted as a fiction officially, the entire price matrix is going to change very quickly. All of the purchasing power for all of the capital on the planet is going to be sucked out of dollars, and all of its derivatives, which includes every other currency on the planet, because the dollar is the reserve currency of the world, and all of that purchasing power will be vacuumed into gold. And if the gold to silver ratio is even maintained at 80, 90 to 1 or whatever it is, which it will be even in the worst case scenario, silver will move up pro rata with gold. And in the event this actually happens, then I believe that ratio will finally head towards 15 to 1. So yes, silver holders, you're safe. If there's a gold revaluation, silver will also be affected even more so. And so I hope this bill passes. We can rip off the Band-Aid and get to the end game statutorily. I still doubt it's going to happen, but we have the bill. It's been submitted. Now it's got to get through committee, and if it does, and that accounting fiction is erased, the end game will be here.
If this happens, the financial system may never be the same. What do you think? Is the dollar doomed? Drop your thoughts in the comments, like the video, subscribe, and hit the bell icon so you don't miss the next big update.
My response is, it makes no difference what they purchase. They don't even need to purchase anything. It's not a matter of the monetary supply increasing by 800 billion units. That isn't particularly significant. The money supply is already approximately 23 to 24 trillion, or whatever the exact figure is. An additional 800 billion won't lead to prices tripling, quadrupling, or increasing fivefold within a matter of weeks. The concern lies in the reassessment of gold itself. Once the illusion of $4,222 is officially acknowledged as a falsehood, the entire pricing framework will shift rapidly. All the buying power for every form of capital on the globe will be drained from dollars and all of its related assets, including every other currency worldwide, since the dollar functions as the global reserve currency. All of that buying power will be pulled into gold. And if the gold to silver proportion remains at 80 to 90 to 1, or whatever it currently stands at, which it will, even in the worst case scenario, silver will increase proportionally with gold. If this actually takes place, and I anticipate that ratio will eventually move toward 15 to 1, then yes, silver investors, you're secure. If gold undergoes a revaluation, silver will be influenced even more significantly. Therefore, I hope this legislation is approved so we can remove the barrier and reach the final stage legally. I still have reservations about whether it will happen, but the proposal exists. It has been introduced. Now, it needs to pass through the committee, and if it does, and that accounting illusion is eliminated, the final stage will arrive. Should this occur, the financial system may never be the same. What's your opinion? Is the dollar on the brink of collapse? Share your thoughts in the comments. Don't forget to like the video, subscribe, and activate the notification bell so you stay informed on the next major update.